Much. Wow, full room. Only do. Excellent. Well, I'll run through it quickly. I've got around 15 minutes, I believe, to give you an update on the regional performance. Quite a lot of data to get through. Before I even start, as you can tell by the topic on screen, I'm a data guy, very much focused on profitability data. We collect the full profit and loss data for hotels all around the world, and we utilize that data for benchmarking and for the investment community to use in the likes of feasibility and underwriting of deals. We're fairly new. I mean, I guess we've been around for about 8 years, which may be why some of you won't have heard of us, but very much focused on hotels and on hotel profitability. So to begin with, I'll start with the macro picture. As we've been collecting this data for right the way through the pandemic, including the full expense lines, even when hotels were closed and when markets were really at the bottom of where they could have been. As you can tell by the picture, it was quite a depressing time to be presenting financial data to hotels. But I think the fascinating thing is now that as things are starting to ramp up, we can not only look at the top line performance, which I'm hoping you're all fairly aware of how things are currently standing, but also the cost lines and how things have maybe changed from an operational perspective as hotels move forward into what is really a new age for hotel operations. Now, from the macro picture here, again, very, very big view. Really Europe and the US, as you could see, for around 8 months now have been hovering around the 2019 levels. I'll look at the slides in two different ways today. You'll see index versus 2019, which I'm sure you will have seen before. We're still doing that at this point. I'm hoping over the next couple of months we'll start referring back to prior year, because we can start seeing, as markets started to open in this part of the world to international travel, it's now very relevant to look at year on year. But until now, we're still looking at recovery versus the 2019 position. Now, as you can see from the picture in the Middle East, things have been pretty crazy there. We saw real top-line growth driven by some huge factors, quite a small market in comparison to Asia-Pacific. But as you can see here, the one-off events, the return of religious travel, the World Cup in Qatar, and some other big events like the Expo in Dubai, for instance, drove real high top-line performance, the recovery of all channels of revenues, and actually the hotels have taken the opportunity during the pandemic, almost forced on them, to really cut the cost lines and change the way they're operating. So from an overall profitability perspective, hotels in the Middle East are operating way better than they were back in 2019. Now, the vulnerabilities in the numbers in Europe and in the US are quite evident, as you can see by the picture. As soon as we came into January and we saw demand drop off in Europe, the high cost pressures that hotels are experiencing, mixed with this small dip in demand, meant the profitability of hotels dipped very, very quickly. And I think that's an early sign for hoteliers in Europe as to what that will look like going forward, because of course, high levels of inflation, real high levels of cost pressure, high demand on the supply chain and also in the labor market has meant that prices have really driven up in a way that we haven't really seen elsewhere in the world at the same level. And then, of course, Asia-Pacific, I presented in Singapore back in October time, and it was already really good early signs of what was going to happen in India. Certainly as Australia opened its doors to international travel, demand ramped up really, really quickly. And even the likes of Singapore and some of the other countries in Asia-Pacific saw early signs of quite speedy demand. That is really the overview of what you can see in the data, which is that we are back. We are really back, and things are really moving quite quickly from a demand perspective. Now, of course, Asia-Pacific was very much reliant on a lot of Chinese travel, not just in the region, in the actual country of China, but of course the country feeds a lot of demand into other parts of the region. Now, as things stand, as you can see here, certainly Southern Asia has been on top. This region has really driven the recovery of the wider Asia-Pacific region, India in particular. But as you can see from the numbers now, we're hovering around 30% higher than where we were in 2019 from a profitability perspective. So again, very macro view. There are a lot of stories in the numbers, and I will come to them. But as you can see, the early signs are pretty epic as things stand. Hoteliers are not, again, going back to the point, in this region, some of the cost savings that were found during the pandemic were carried forward. And I think that is maybe the thing to take away from this, other than the issues around demand generation, is the fact that hotels are being operated leaner than they were prior to the pandemic. But it is really quite significant how you could see the ramp up of revenues. the overall picture is that we are well ahead of 2019 levels, but not just in the rooms, from a rooms perspective. Around the world, I can tell you already, the US is hovering around 10% down in conference and banqueting revenues. We're all here today. We're of course having, this is probably, I think, my 16th or 17th event already this year. So certainly from a conferencing perspective, things are really moving forward. And as you can see from the numbers here, just in India alone, you know, these markets, albeit there are some movements between the same period in 2019. Some of the big events won't have happened in the same time back then. But as you can see, really conference and banqueting has also returned in a way that we hadn't really seen in the likes of the US and in Europe. So again, quite exciting indicators already from that perspective. And from a segmentation perspective, I won't labor on this too much. We actually collect 11 segments per the uniform system of accounts. I've amalgamated some of these together because actually I think the interesting story from here is that whereas there's struggles for corporate travel returning in other parts of the world, here actually corporate travel is up versus that same time in 2019. We're well ahead of where we were from corporate travel perspective, and actually it's leisure. It's the opposite way around than what we've seen in the US and in Europe. It's leisure that's really lagging behind from a demand perspective. And even within the region, of course, there are different perspectives. As I've been chatting with a few of you today already, it's really Sri Lanka that's standing out from a performance perspective. Of course, huge challenges, not just on the return of demand, but also real high cost pressures coming from lots of different angles, specifically utilities, but of course we have the impact of energy costs on other parts of the business that are quite clear within these numbers. But it is still, the early signs are looking strong. Demand is recovering. We are starting to see performance ramp up even in Sri Lanka, which until now had really lagged behind the rest of the region. Now, what's driving India's recovery? Well, really, it's not just this return of occupancy that you could see in the prior numbers and, of course, corporate travel, but rates are up significantly across the board. Hoteliers are clearly able to charge more than we were prior pandemic. Yes, we're 3-4 years down the line now, so we're comparing back to a time that far before is of course not always that useful, but really I think it's quite interesting to see, because as the cost lines have been shaved and in some ways not lifted at all, we've seen these significant rate increases, and there's only really 2 or 3 segments there that have seen a drop off, and some of that is again because of the way that maybe the government are using some of the hotel stock as things currently stand. But across the board, as you can see, significant increases, up to kind of 30-40% increase in rate in some of the segments is really significant and is really going to impact hotel profitability. Now, how sustainable this is, what is driving this, and how we're going to take it forward, of course, that's a whole different subject for investors and hoteliers to consider as we move forward. And it's not just the rate. It's actually, like I said, on a per occupied room basis, we're actually able to collect a lot more revenue out of our customers than we were prior pandemic. So for instance, you can see food and beverage spend versus that same time 3 years prior. I'm taking a 6-month rolling period now to try and look at stabilized numbers. But versus the same 6-month period prior pandemic, you can see here, for instance, I think we've lost the legend there, the one half of the legend, but the orange is India and the rest, the gray is South Asia. So you can see even just across the board there, we're seeing a 16-18% increase per occupied room in F&B spend as well from customers. We have seen high levels of cancellation charges. It's no real surprise there. We're at record levels of cancellations globally. And of course, there are still high levels of cancellations. The difference now compared to mid-pandemic was we're now charging customers for, and it's actually become quite a steady and highly profitable revenue stream for hoteliers, something certainly to consider going forward. Spa and leisure revenue over the macro region is actually up, although in India you can see here slightly back. And golf revenue, where I put this on there because it's not normally something we would talk about in hotels, but actually in the US versus the same time prior pandemic, golf revenue was up kind of 60-70% per available room. In Europe it's around 30-40%. But you can see here in this region actually it's not moved very much. We're basically back to where we were prior pandemic. And from the cost line perspective, now, of course, like I said earlier, this zero-based budgeting process the hoteliers were almost forced into forces us to relook at the way we do things. Yes, we generally try to keep things quite tight in the front of house areas of hotels, so the operational challenges we're all very familiar with as hoteliers. But it was those hereditary costs, those back office costs that I guess had been, in some ways relooked at. We've been able to embrace technology. things that have moved forward. Owners and operators much more aligned in working together to be able to cluster, centralize, maybe offset some of these costs, automate them using technology. So it's no surprise to see IT and accounting as the two areas that have mostly been affected from a fixed cost point of view across the hotel estate. The other areas of the business, again, as you can see, HR maybe also slightly down versus that same time. Not many of the costs have increased, and I think that is quite significant, knowing that the rate is so dramatically up, albeit Sri Lanka, again, I'm using as an outlier because some of the numbers really look quite crazy versus the other areas of this region. And then across the board, there's no real surprise to see, for instance, booking costs are up so significantly. If the rate is up, there's been quite a move towards, even in the last 3 years, quite a move towards online booking. And of course, that is driving the booking costs up, and it's no real surprise. But I think it's really useful to look at on the left-hand side as you look at it. This region actually pays much less in the way of booking costs than many of the other macro regions of the world. So actually, in this part of the world, you can see in Europe, for instance, over that kind of up to around 4%, 4.5% of total revenue is spent in booking costs. In this part of the world, it's under 2%. And again, that, it's quite significant to keep in context of how this moves, because even if it does increase, it's still well behind what we're seeing on the global trend point of view. Other areas of the business, utilities, no real surprise for many of us. Energy costs have been a real challenge. The good news, and of course the positive news globally, is that the oil price is on its way back down. Energy costs are on their way back down overall. And of course in Europe and in the US, where generally these costs are fixed and for over 4 or 5 year periods, many operators are only just coming out of those 3 or 4 year deals, and therefore are now taking advantage of the fact that the price is coming back down to be able to lock in for the next 3 or 4 years. Now India, as you can see again, stood out slightly there from these numbers because the increase in energy costs has been nowhere near significant as the wider region for reasons I'm sure we're all well aware of. And then as you can see from the other areas, these are just pure expenses. This is not labor. The previous slide was looking at labor costs. This is expenses. So this is just, as you can see, some of maybe the optional costs in sales and marketing have been hedged. Some of the IT expenditure, actually surprisingly, I think some of that might have moved to capital expenditure, which is why you see some of the drop-off in IT expenses. And again, the lowest areas that you've seen across the board, there are, for instance, food and beverage cost of sales, which although are significant, they're actually lower than what we've seen in some of the other areas of the hotel business. So on that point of energy costs, of course, it is really challenging to say that, we're in a better position in this part of the world than you've seen in other parts of the world. As I said, some of the prices we've seen in Europe are a 300% increase in unit price. Well, here you can see, we have seen the energy costs are, of course, up versus that same time in 2019, but it's much more manageable than what we'd seen in other parts of the world. And I think, as you can see from these numbers, things have kind of straight-lined as things currently stand, and we should start to see them dip in over the coming months. Now, what's that done to the overall margins? Because, of course, if you consider inflation on the top, I don't adjust for inflation on our numbers, as you could see from what I've just shown you. And I don't adjust for inflation on the top or on the middle, because, of course, on the bottom, it all nets out. As you can see here from a profitability perspective, from a margin perspective, it's only really the upper upscale segment that has not really shifted. In fact, it's dropped off a little bit from a profitability perspective. All of the other asset classes have really seen an uptick in profitability. And again, another outlier in this region versus other parts of the world is that the luxury segment has not really seen the incredible uplift that we've seen in the US, in Europe, and also, of course, massively in the Middle East. So certainly, the upper upscale segment and maybe the luxury segment are the real outliers from what we've seen in other parts of the world. It's actually been the lower end segments that have seen the largest uplift. Maybe that's because the efficiency of the model and the size of the increase in average rate has really driven that. Of course, as you see other areas of the business, they're not so exposed to the likes of food and beverage cost increases, maybe to other parts of the business that they didn't really have to shave in the back of house areas. They're a much larger portion of the costs than you'd see in the front of house areas of the lower end segments. And of course the resorts. which, you know, really right the way through the pandemic with the areas of opportunity. They were the areas of high demand because where people really needed to get away from the cities, get away from their businesses. These were the areas of opportunity, certainly on a global level, that customers were taking to use. And you can see here, that's again rolling over that last 6 months versus the same time 3 years prior. Now, overall, you can see for South Asia, what that's meant is that we've seen an increase in profitability over this was a 33% increase in gross operating profit per available room. Across all areas of the hotel business, it's pretty much either aligned or up versus that same time. Expenses, you can see here, labor, for instance, although it's slightly up versus the same time, it's actually 2.3 percentage points down from a labor margin point of view, directly hitting the profitability. In the Maldives, it was quite interesting to look at the Maldives numbers because, of course, we've seen such exciting times there during the pandemic, huge rate increases, again, on what were already very high rates on a comparable on a hotel level. But even now, we've seen TrevPAR is up, profitability is up 27% overall. For India, you can see here again, the overall picture is just under 20% increase in revenue, which is amazing really when you think about it. And over 60% of that has flown through to the bottom line. So in profitability terms, again, over 20% up versus that same time. And of course, Sri Lanka, as I mentioned, is the one outlier, as you can see here. Profitability dip, but as I said, early signs that demand is returning, and if these cost lines start to alleviate, we should be able to see the profit margin grow very quickly in Sri Lanka also. Sorry, I'm flying through these slides because I'm conscious of time. I'll just give you the wider picture also in Asia. As you can see, some of the key markets. The general picture is that the key cities are mostly up in profitability, or up in profit margin versus that same time 3 years prior. The exceptions you could see on this side of the chart, which will be Beijing, which is no real surprise as things currently stand because this is 6 month rolling. It looks a lot better over the last few months. The likes of Kuwait and Muscat, which have really struggled to capture any of the return of demand versus certainly other parts of the Middle East, as you could see also from Doha and Dubai and Abu Dhabi, who are basically atop of the list from a profitability margin perspective. And just behind them, you can see there Mumbai and Maldives. So it's a very quick rundown of what's going on from a data point of view in the region. I'm happy to talk to you about any other parts of this. So a few predictions from my point of view is that I think the luxury segment in this part of the world is, again, not really seen the huge change that we've seen in other parts of the world, but I do think other parts of the world will see it soften anyway over the next 12 months. It's really been quite exceptional what the performance has looked like till now. I won't talk too much more about the Middle East because I think that has been really, you know, the most operators there are predicting that the revenues will go, or certainly that profit will go backwards year on year because of the exceptional year that they've just gone through. I think actually seasonal hotels, going to my point on fixed costs dropping versus the variable costs in the front of house areas of hotels. This could be an opportunity in the low months, certainly for the seasonal hotels, for the resort locations, as we have lower fixed costs going into those periods now. That's already been proven, certainly in the Middle East hotels, and some parts of this region as we've gone into the low months now into the winter. Energy prices, as I said, are good signs at the moment that they are on their way back down, and hopefully that will really help not just energy costs in hotels, but everything that feeds, of course, transportation, supplies, etc. And then outside of that, I think the exciting thing could be is this shift in the cost base. That's one to really keep an eye on, and it really is different, even within one location, even within one cluster of hotels. You can see quite a difference between those who have and those who haven't. Those who've been able to take advantage of economies of scale or be creative in the way they operate their hotels versus those that didn't is quite significant. And again, really the data does show that. You can really see which areas of the P&L have changed versus those that hadn't. So I'm sorry it was so quick. I hope you managed to keep up with the slides. I will share the slides afterwards, by the way. They will be available. Please get in touch if you have any. And I'm happy to take any questions if anybody has any. Thank you. I was obviously very clear. Thank you very much.